Do you ever feel like they're lying about the economy? If you look at the economic data, it says that the job market is booming, and it'll tell you that incomes are rising faster than inflation, which means you should feel richer than ever. But a lot of people are not agreeing with the data. Northwestern Mutual published a report saying Americans feel like incomes still aren't keeping up with inflation. And Yahoo Finance says that it's still very unaffordable for Americans to buy a house. And according to the CNBC quote, the job market is trash right now. So if something feels off about the economy, you're not alone. And in this video, I'm going to show you not just how you can survive, but thrive through an economy like this. That means we're going to talk about three things. Number one, we're going to talk about the money game that rich people play, which is how some people get rich and everybody else doesn't. Number two, we're going to talk about the 3 rules in order for you to become wealthy yourself. And then number 3, I'm going to talk about how you can actually win in this type of economic system. So let's break it down. Over the last 5 years, from 2020 to 2025, the reported inflation rate was 24.2%, which means on average, things are 24.2% more expensive. Compare that to the median household income in America, which has grown by 22% over those same 5 years. And then you can compare that to the stock market, which has grown by a little bit more than 90% over the exact same time period. That means you worked harder to get a raise at your job, which might make you feel good initially, but you're actually poorer than you were before, while investors get a whole lot richer. And you might say, well, Jaspreet, that's just because of the pandemic. Well, let's zoom out a little bit more. Over the last 50 years, between 1975 to 2025, the median car in America has gone up in price by 840%. The median house in America has gone up by around 1,200%, and the cost to go to a public university for 1 year has gone up by around 2,000%. But how does that compare to people's incomes? According to data from the Bureau of Labor Statistics, the median household income in America has gone up by around 600% over the last 5 decades, which means yes, you've gotten a raise, but things that you need have grown in price even faster than your raise. But watch this. The stock market over these same 50 years has gone up by around 4,000%. And for those of you that are wondering, I'm talking about the S&P 500. Charles Dickens said it's a tale of 2 cities. I'm telling you, it's a tale of 2 classes. You have the investing class, which is getting richer, and then you have everybody else who is slowly becoming poorer because yes, your income is going up, but the prices of things are going up even faster than your incomes. Well, Jaspreet, not everybody's born with $1 million to start investing. I get it. I learned this the hard way, but you got to learn the game because this is just the beginning. Take a look. By the way, for those of you that are investors or want to become investors, my team at Briefs Media publishes a free daily newsletter called Market Briefs, where we break down what's happening in things like the economy, housing, stocks, crypto, and the global markets into a fun, witty, and easy to read newsletter. It's read by hundreds of thousands of investors every single morning. Plus, when you join Market Briefs, you'll also get my investing masterclass as a bonus, where I'll break down how you can start investing, and number 2, how you can find big investment opportunities before everybody else. So if you want to get Market Briefs and my investing masterclass all for free, all you have to do is click the link down in the description below. As an attorney who's not your attorney, I can tell you that your company and your CEO has a legal duty. It's called a fiduciary duty to make one person rich. Now you might think that the duty is to make the employees rich, that you're going to work to climb the corporate ladder, that way you can earn more money and earn more salary, but that's not exactly how it works. Your CEO has a fiduciary duty to make the shareholders of your company rich, period. The employees' jobs is to make the shareholders richer. That is the goal of the company. And if you don't believe me, go and start studying corporate responsibility. What does that mean? Well, your company is working to drive up the value of the company. Who does that benefit? It benefits the shareholders. Who are the shareholders? It's the owners of the company. Who are the owners of the company? It's the investors in the company. And the nice thing is, you don't have to have $1 million to start investing, but if you want to win in this economic system, you have to become an investor. And that's not all. In case you didn't know, I'm a little bit of a weirdo, and in my office I have a copy of the Federal Income Tax Code. And the Federal Income Tax Code is a book that's 2,000 plus pages long with 8-point font talking about taxes. But the interesting thing about this is what I'll tell you very quickly is when you earn your money as a W-2 employee, you're going to pay the highest tax rates and get the lowest tax breaks. So when you work to climb the corporate ladder, yes, you will earn more money, but you're also paying the most money in taxes. Let's play through an example. Let's assume that you work very hard and you climb the corporate ladder. Great. Now you're earning a ton of money. Well, the top tax rate for a W-2 employee is 37%. Now, sure, you're making a lot more money, but you're paying 30% of the money in federal income taxes. The top tax rate for an investor is not 37%, it's not 30%, it's 20%. Not to mention that you can also qualify potentially for bigger tax breaks as an investor, depending on where and how you're investing your money. For example, real estate investors have some of the biggest and best tax breaks that our tax code has to offer, which means as an investor, you can make more money and pay a lot less money in taxes versus when you are an employee, you can make a lot of money, but then you have to pay a lot of money in taxes and not have that many tax breaks. Now, I want to tie this all together because just a few minutes ago, I was showing you how over the last 5 years and the last 50 years, inflation has outpaced incomes, but investment values have outpaced inflation, which means investors have become wealthier while people who just rely on their incomes have become slowly poorer. While at the same time, our economic system is designed to make investors richer because the corporate system has a fiduciary duty to make shareholders rich, not to mention our tax code is designed to benefit investors more than employees. The last part that I want to mention about this before we move on to number 2 has to do with what I like to call the hidden tax. Because the hidden tax is a concept that many people don't know exists, and it makes so many people poorer slowly. And what I mean by this is when the United States government goes out and spends money, we all remember the pandemic stimulus and the unemployment checks and the stimulus checks and the PPP loans and all that other stuff. It made people feel great in the short term. But the thing you want to remember is the United States government does not have the ability to fund these expenses because we have this massive national debt. And the way that the government funds all these programs or checks or whatever you want to call it is through debt. And what's very important for you to understand is when the United States government goes into debt to pay for these things, who's going to pay for it? In 2024, the United States government generated about $5.1 trillion in tax revenue. But then the United States government went out and spent around $6.9 trillion in tax revenue, which meant they had to borrow around $1.8 trillion. This is called deficit spending. Now, that $1.8 trillion can be used in a lot of different ways. It can be used to fund infrastructure programs, more contracts for whatever. There's a lot of ways that the government can spend this money. And it can feel good because it provides jobs, it pays for salaries, and it can pay for a lot of benefits. But here's the part you need to know. When the government spends money they don't have, somebody's got to pay the price. And the first and the most obvious way is your tax dollars are going to be used to, number 1, pay that money back plus interest. And then you have number 2, the hidden tax, which is like this. When you pay taxes and the government uses your tax dollars to build a bridge, you know where the money's coming from. There's a clear source and destination. The money came from here and it paid for the bridge. But when the money comes from here and it pays for the bridge, well, now who's funding that money? Now you might say, well, aren't our tax dollars going to be used to pay that money back plus interest? And you're right, but what about the question of where this money comes from? Because the reality is the government can't just borrow $1.8 trillion from people or governments because there's not enough money out there. So our central bank, the Federal Reserve Bank, has to print this money and lend it to the United States government, which means more money gets created and it enters our economic system. When the more money gets created, now you're diluting the value of our dollars because our money isn't backed by physical gold or precious metal. You print more dollars, the value of each individual dollar goes down, causing the prices of things to go up. That's why we've seen this inflation happen. And over time, what we've seen is that incomes generally don't keep up with inflation, while asset values, stocks and real estate, have outpaced inflation. This is the game. We live in an economic system that's designed to make investors rich. This hidden tax, inflation, benefits investors, it hurts everybody else. Our entire economic system is designed to make investors rich, not employees. Our tax code is designed to make investors rich, not employees. But we're taught to be an employee. Now, it's not bad to be an employee. You have to know how to use that salary now to become an investor. That way you can benefit from this economic system, because this system is designed to make investors richer. And I'm going to show you how you can do this in 3 rules. Rule number 1, work to own, don't work to earn. This is how the financial statement looks for the majority of Americans. You go to earn money, and I don't really care if you're a doctor, a teacher, a truck driver, or something in between. You work to earn money. Then you pay taxes, and then you spend your money, and then you wonder where all of your money went. People are working to earn, that way they can spend, and we think in terms of spending. What does that mean? Well, if I could make an extra $10,000 a year, what car could I drive? Or if I made an additional bonus, could I go out and buy the house that I wanted? Or if I got a promotion, I could take my family on a nice trip to Cancun. We think in terms of spending. I can make more, then I can spend more. And if I earned an extra $1,000 a month, I can go out and buy this additional thing. But the way you become wealthy is to think in terms of investing. If I can make more money, what other assets could I buy? What other investments could I buy? Now, what are the investments that I keep talking about? Well, stocks and real estate have proven the test of time. These 2 asset classes have built more wealth than anything else over the last century in the United States. The 3rd asset class would be starting a business, but that's not for everybody. Anybody can be an investor. Anybody can invest in stocks. Anybody can invest in real estate if that's something that you want to do. Now, real estate is harder than investing in stocks, but both of these are available for anybody, and they can be generally pretty passive once you learn how it works. Rule number 2 is no more living fake rich. It's very easy to look like you're rich, especially in America, because guess what? If you walk into the BMW dealership with $2,000 in your bank account, well, they will be more than happy to sell you a brand new 4 Series because you can finance it. If you walk into Gucci with negative $200 in your bank account, Amex would be very happy to finance the Gucci scarf for you. It's very easy to look like you made it, but it's very different to actually make it and not have to worry about these things. And this is where, if you don't want to live fake rich, this is gonna hurt, but take a deep breath. Here's what you gotta do. Number 1, no more financing anything if it doesn't put money in your pocket, even if it's a 0% APR. Buy these liabilities with cash: your cell phone, your car, your clothing, your vacations, your furniture. It's expensive, I know, but if you can't afford it, buy something cheaper. It's gonna allow you to have a whole lot more freedom. It's very easy to get somebody to buy something when all they have to do is put down $30 a month, or $300 monthly payment plans when you have to buy a big thing, because you don't have the whole pain of money leaving your account today. So from now on, if it doesn't put money in your pocket, you do not finance it. Number 2, when it comes to luxuries, follow something like my rule of 5. If you can't buy 5 of them, you can't afford 1 of them. You want to buy a $10,000 Rolex? Great. You better have $50,000 before you go out and buy that Rolex. Rule number 3 is no risk equals no return. You've probably heard me give that disclaimer, and I'll give it to you right now. Investing has risks. You are never guaranteed to make money when you invest. In fact, you will lose money at some point. So make sure you always do your own due diligence and never blindly trust a random guy on YouTube. Investing is risky. There's a chance that you will lose money. There's also a chance that you'll make money. But here's the thing. You're going to lose money, but the goal of you losing money is to learn how to not lose money. That way you can make more money, but you can't go there and actually make money until you learn how it works. And losing is a part of the learning process. And unless you're willing to go through the mistakes, unless you're willing to go through the losses, you're never going to see the upsides. I have made more mistakes than you can imagine, more mistakes than you can count. I've made videos about them on my YouTube channel. And if I focus just on investing, I have a YouTube video where I went over my worst real estate deal ever. You can watch it. I made every mistake that you can imagine. I had a bad contractor. I got screwed over by tenants. I got screwed over by the city inspector. I had a horrible property. I lost so much money on that deal. And I could have very easily and quickly stopped because it was very stressful. It cost me a lot of money. It cost me a lot of nights of sleep. But if I would have stopped, I would have never seen the success that I've seen today through my real estate investments. I've lost money on a lot of stocks. But if I would have stopped, I would have never seen the success that I have today. I have made so many mistakes in business, so many mistakes, but if I would have stopped, Briefs Media would not be what it is today. Most of the things that I do are wrong. Most of the things that I do will end up being a mistake. But the success that I've seen with my investments and my business are built off of the 10% of things that I do right. And many times, we get scared of making a mistake. And I get it, losing money is hard, especially when you work hard to make that money. But it's a part of the process. You gotta be willing to learn, you gotta be willing to try, you gotta be willing to make those mistakes because it's going to set you up for something bigger. In the investing world, in the business world, those mistakes are called real life tuition. And now that you understand those 3 rules, let's talk about how you can actually win. In this economic system, the way that you become wealthy is by becoming an investor. Now, most of us are not born with millions of dollars given to us that you can just invest your money and never have to worry about it. We have to go out and earn that money. So how do you actually use your money to become an investor and become wealthy? The first thing is you gotta control your money. You have to know how much money you can spend, how much money you're supposed to save, how much money you're supposed to invest. And this is where you need a money system. And one of the simplest rules that you can follow is something like my 75, 15, 10 plan, which says for every dollar that you earn from here on out, 75 cents is the maximum that you can spend. 15 cents is the minimum that you invest. 10 cents is the minimum that you save, which means whether you're making $2,000 a month, $20,000 a month, or $2 million a month, you are going to always put money aside to save and invest before you spend all of your money. Now, if you're in a situation where you're already struggling, you already don't know how you can make your bills, you might wonder, well, Jaspreet, how am I supposed to afford to do this? And I want you to take a step back and think of it this way. If the United States government were to impose a new 25% tax on you tomorrow, what would you do? Well, you'd probably cry and complain and scream, but then you're going to find a way to pay it. Because if you didn't pay it, you're going to go to jail. I want you to think of this like a tax. And I also want you to think about how the tax system works. If you're getting a paycheck, you've probably seen your taxes automatically get taken out of your paycheck, plus FICA. Why do you think the government does that? Because they know if they sent you a tax bill at the end of the year, nobody or very few people would have the ability to actually pay it. Because most people spend whatever money is in their bank account. And this is where you want to start thinking the way that you're taxed. Treat this like a tax. That's not going to make the government richer, that's going to make you richer. What the government does is they pull this money out of your bank account before you even see it. And you can do the exact same thing. Go out and create 3 different bank accounts. One for your spending money, one for investing money, one for your savings money. And then as soon as money hits your bank account, have it automatically withdrawn and deposited into this account and this account, and it should be completely free. If your bank account is charging you to do this, get a new bank. Yes, it requires you to create 3 different bank accounts. Yes, it's a little tedious. And yes, it will change the way your money works. I can promise you that. Because when you don't have the money here to spend, it's a lot harder to actually spend it. And the reason why you want 3 different bank accounts is so you do not accidentally spend your investment money or your savings money. So create 3 different bank accounts, create an automation. So when you get paid, money automatically goes here, money automatically goes here, and then only live off of this one. This savings money is not there to go out and buy a house. It's there to protect you against an emergency, because the reality is people get fired, people can get laid off, you might quit your job, or you might get sick. And now if you don't have money coming in, you still got to make sure you can eat. That's where this savings money comes into play. This investing money is where that wealth is built. Again, stocks, real estate, and building a business are the 3 asset classes that have built more wealth than anything else. Building a business is a completely different game, so I'm not going to talk about that here, but we're talking about stocks and real estate. This is where now you can start putting your money to work while you're working your job, and you can do it passively, you can do it actively, and now your money is working while you're working to earn that money. And if you stick with it, I call it a decade of sacrifice. If you stick with it, you work to spend less, you work to earn more for that decade. You're not going to be able to recognize yourself at the end, because you're going to be working to put your money to work. That way your money can work harder than you. That way your money can make more money than you, because your money can work 24 hours a day, 7 days a week, 365 days a year. You need vacations. You need time off. You need sleep. And you could be a work dog. I mean, you could work 15, 20 hours a day. I did that. But eventually you're going to need some sleep. And eventually you're not going to want to work that many hours. I still work a lot, but I don't work as much as I used to, even if you like working. If you have your money working for you, well, now it's not just you constantly working to earn that money. You created a new stream of income that does not rely on you. And then you have the choice. Do you want to keep working or do you not want to keep working? And even if you stop working, the money from your investments doesn't stop coming in. Even if you died, I know this is getting really morbid really fast, but even if you died, your family still has the money coming in from your investments. That's what generational wealth is. I know a lot of us are never taught this. I had never heard of this or understood this concept because we're never taught this type of investing. But what real wealth is you own the assets that can continue to pay you that don't rely on you. And it requires you to understand the way you get there is by becoming an investor. It isn't just by earning and relying on your salary. It's good to have a good job. It's good to advance in your career. Nothing wrong with that. But the problem is when you rely solely on your earnings, on your W-2 income, and you have no assets. And that's the problem for most of America. They're working to get a paycheck. Some people are working to get a bigger paycheck. But we have no clue on how financial education works or how investing education works, while the wealthy and the ultra wealthy are solely focused on their investments. And I want you to start thinking about how you can acquire more assets, build more ownership. That way you can build wealth in this economic system. Again, if you want some more resources, you can check out Market Briefs plus my Investing Masterclass. I have the link to all of that down in the description, and it's completely free.
I would love for you to share first, how do you think that institutions profit from our financial uneducation?
Well, I think the system, our economic system, is designed to keep the majority of people poor. After learning about how money works, you start to see why certain things work the way that they do. And I'll explain exactly what I mean.